Hi there, welcome to Kneppy Invest, and welcome to another answer and reply video. Now, before I get to answering your questions and replying to your comments, just a gentle reminder that if you want to provide me with your favorite stocks, those stocks you think are going to do really well in 2025, you can leave those stocks, as many as you want, 1, 3, 5, 10, 20. I don't think I'll receive any more than 20 picks from any viewer, but if you do want to provide me with those companies you think will do fairly well in 2025, leave those companies or stocks within the comment section of the video titled, "What are your stock picks for 2025? Already received 40 comments. Now, some viewers will release or provide their stock picks within other videos comments, and I'm okay with that. But I do prefer to leave your picks within that particular video. It's only 1 minute and 59 seconds long. I did release that on January the 3rd, the evening of January the 3rd. So at this point in time, 40 comments. The other thing I just noticed is my video titled "Status of All My Trading Positions" has been fairly well received. A lot of views, maybe not abnormally high, but higher than normal. And the other thing was 73 thumbs up, 0 thumbs down. So it seems like that is the sort of content you do like as a collective group. So if you like more of those sort of videos, just leave your thoughts within this particular video, and maybe I can do more videos like this. Maybe not exactly like this, but maybe when I buy or sell trading positions, I can do videos on those. Okay, so leave your thoughts within any videos, with any video. Yeah, you can do that with any video. Anyway, so let's go back to answering your questions and replying to your comments. So let's go to the community section. Let's have a look at all your comments. And 1 minute ago, I received a comment from Jad Terrell, and I'm receiving these comments every single day. It's almost exactly the same comments. The first time I received this comment, I was confused by it. I didn't know what they were trying to ask. And now when I receive this sort of comment, I immediately report it, unwanted commercial content or spam, and report it, but I keep getting them, and they're all by different people. Anyway, hired user on my channel. Okay. Anyway, so the most recent comment was from CDG03, and this is in relation to picks, some stock picks for 2025. So we can move on to the next one. Don't worry, CDG3, you left it in the wrong video. That's okay. I'm going to accept it. Okay, let's have a look at the most recent non-stock pick question or comment, and this is from Fishball 1634. Hi, hello Fishball, how are you going? Both ASX, S&P 500 did amazing in the 2 years. If you look back in history, what's the chance that in the third year it can give another 20% return? I already looked at the chart, but I want to see if our thoughts align. I actually did mention this in a recent video. I forget which video it was. It could have been on the 2nd of January. Yes, 2nd of January, ASX Daily Rundown, Weebit Nano drops 11% on positive news, and S&P 500 up 20% in back-to-back years. And I did mention that's the first time this has happened since 1997-98. Yes, so let's have a look at the S&P 500 yearly chart. Yes, you can look at any time frame. This is the yearly chart. These are calendar years. Yes, calendar years. You can see the majority of the years, S&P 500 goes up. Now, in between these up years, occasionally you do see a down year. But if you do have a look at the last, say, 40 years, we've seen 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 down years. So roughly 70, 75% of years are up. This is why we invest in the stock market, because just based off probability, 2025 is going to be a good year. Now, it doesn't mean it will be a good year, but just based off probability, it will be a good year. Now, it's completely different than flipping a coin, because when you do flip a coin, it's 50-50 whether it's going to be head or tails. And if you do get heads 2 times in a row, doesn't mean the third time you're going to get a tail. It's still 50-50 that the next flip could be, again, a head. Now, this is a little bit different. I do think if you have 2 really good years in a row, doesn't necessarily mean the third year is going to be a good year or a bad year, like flipping the coin. This is completely different. But historically, this sort of 2-year run doesn't happen all that often. We have to go back 25 years. And the last time this did happen was in the late 1990s. when the stock market went on a massive boom over a 5-year period. And I do believe, yes, I do believe, very close to having 5 years in a row where the S&P 500 was up 20%. The 5th year was actually only up 19.53%. So it went up 34%, 20.26%, 31%, 26.7%, and then 19.5%. And then we had the tech bubble burst. And then it fell 3 years in a row. In fact, that is unusual to see the stock market or S&P 500 for 3 years in a row. But I would say it is or would be unusual for us to have another, or S&P 500 to have another 20% rise in the indice in 2025. But I would not say it's absolute zero chance of happening. If we do have a look at, say, the XJO, also went through this. It's actually, the funny thing is, if you look at the yearly chart, it's going up in a straight line, isn't it? Almost. You can actually put a line here, and you could just say it's just almost going up in a straight line. Anyway, that's interesting. I've never really thought about that before. But when you do have a look at the XJO, it goes back to like 1990, and just like the S&P 500, down years don't happen all that often. It does seem like it happens a little bit more often for the XGO. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. So there's 15 years out of the past 44. So that, yeah, the odds, the chances of a down year for the XGO is a little bit more than S&P 500, but overall many more chance of a good year. And that's why the stock market does rise over time. And look at that year, 2008, S&P, not the S&P, XJO down 41.3%. Maybe that's going to happen again. Maybe. Anyway, so probably my answer to you, or this particular question, is I'd say it's not out of the realms of possibility that we won't see another 20% return, but I think the chances are lower because we've had a really good 2-year run. So I'd say the chances are pretty low, but not out of the question. Hedging your bets, yeah. But this is based off probability, and we're also talking about the future. We don't know the future. And everything's based off probability when you're talking about the future. Nothing's set in stone, nothing, even the sun rising in the morning is not set in stone. There is 1 year where it won't, it's just going to explode. And who knows, maybe there's an alien race out there who's really envious of our star and they will steal it. Who knows? So the chances of the sun rising tomorrow morning is like almost 100%, but it's not exactly 100%. Anyway, so what I'll do now is I'll just go or bypass all these picks. Rams Demand says Bisalloy went ex-dividend on the 3rd of January. They announced a div back in 8th of November. That does explain why the share price of Bisalloy Steel dropped. What was it, 10%? For some reason, I think it's 10%. Yeah, 12.95%. Dividend, they went ex-dividend. That makes sense. I just thought... So a lot of times when you do see the share price drop a lot and there's no explanation, going ex-dividend can be an explanation. But that means this company has a pretty big dividend. Does it mean it's dividend 13 cents and the share price dropped 58 cents? That seems like an excessive drop for a company that's just gone ex-dividend, doesn't it? It just seems excessive. Dividend 13 cents, share price dropped 58 cents. Anyway, but thank you for that explanation. Thank you. Let's go back. Happy Now, another beautiful comment from Happy Now. Always look forward getting home from long days at work or hospital and getting into another video of yours, see what the market has done. Nice sharing your work life. It's always nice seeing and hearing people, the things people get to up away from YouTube and the trading lives. Well, to be honest with you, my YouTube life is probably less than an hour each day. Well, depends how long the video is, but very little time do I spend on YouTube. Well, that's not true. I do watch some videos on YouTube, but anyway, makes the presenter seem more human and relatable. Uranium jumping was a head scratcher in there. Well, it was because of that mine in the Canadian mine in Kazakhstan who have halted production because of government issues. Personally, I also thought that lithium was going to jump way before uranium with all the forward trend for more power in tech to power AI. Can't see how lithium can stay at these levels in months to come. I probably have to agree with you. I think eventually lithium will turn positive. But I do remember, which company was it? Lake Resources just mentioning there's going to be an oversupply in lithium for the next 5 years. Now, that could be their own opinion. I haven't really delved deeply into it. And the other thing I should mention, both uranium and lithium, I have been bullish on in the past, and I was way too early. So I'm trying to, I want to remain a little bit more grounded when it comes to lithium, because I do think eventually we will see a really nice bull run in lithium, but I don't want to get in too early. And right now, who knows, the price of lithium could go sideways for a long time, but could even drop a little bit more. So I just don't want to get too early right now to lithium, but I do agree that eventually lithium will become a hot sector again, or hot area again. Thank you. Happy now. Okay, Jian Turk Table. Great work as always. Paradigm Biopharmaceuticals is worth a look for an up-and-coming stock. I think it's Paradigm. Paradigm Biopharmaceuticals. I actually don't know much about this company. If I have looked at this company in the past, I can't tell you what exactly they do. We do know it's biopharmaceuticals company. They just did a couple raising, 9th of December. So at least they've got enough cash. A lot of times I'll just have a look at any sort of presentation the company has released. So I won't do this in this particular video. Have a look at what they're doing, how close they are to getting FDA approval, getting products being sold, getting receipts, revenue, that sort of thing. And then in these sort of companies, also just have a look at the chart. If the chart does look fairly bullish, that could be a good sign moving forward. But I want a few catalysts for me to get excited. And when I do have a look at the Paradigm chart, there is an increase in interest in this company from late November. Up until late November, the share price and the chart not looking pretty good, and the share price pumped up, and then the share price has pulled back. By the way, I have taken a trading position in this company. It's just a trading position, and there's a reason behind that. It's just a chart. It has pulled back, and I just took it on this a little pullback. I think I bought it 38 cents, 38 and a half cents. And other than that, I don't know anything about this company. It was just a trade. I just completely forgot about that until I looked at the chart. Yeah, so Paradigm Biopharmaceuticals, it should be in my technical portfolio. There it is. And what I should do is put where I bought, exactly where I bought, when I bought. It was just a little bit of a setup, nice setup. So thank you for that, Jian Turk Table. I completely forgot that I took a trading position in Paradigm. Let's go down. And there's another one with stock picks in a 3rd of January video. Okay, Ajan Jan 11. How long do you tend to hold your losers before deciding it's money better used elsewhere? There is no set time. I have thought about that. I have thought about giving a company a certain amount of time, like 3 weeks, 4 weeks. And then if the share price doesn't, continue in this upward momentum, then I should sell out the position. But I thought, no, what I'm going to do is it's all, relative to the company itself and the chart. And the reason behind that is at times I have been quite a bit patient, maybe too patient. And a classic example of this would be Gentrack. I held this for 2 years before it moved into an uptrend. And I think 2 years is too long. Yeah, 2 years definitely right now would not be a time frame I would be looking at. That's way too long because you have your money tied up into this company and share price is just going sideways. It did work out for me in the end because the share price has gone bananas since then, but 2 years is way too long. But if we go to a few other companies, maybe Ansell is a good one. So I bought into Ansell. Yes, I bought into Ansell on the 9th of April. I thought that was a breakout, and then the share price went sideways for about 3 months. In fact, I went sideways, started to head really up in August. So we're talking about, what's that, 4 months. And I was patient enough to maintain a holding in this for that 4-month period. Now, the real breakout for Ansell actually happened on the 20th of August when they released the results. And the share price on that day rose 8.9%, and then the share price started to go up. So in this case, I did see a breakout. and not on the back of any financial news. That is my favorite sort of breakout. But I was patient with this, and I am prepared to be patient. So willing to wait 4 months, but then I think after about 6 months, probably that's the sort of time frame. And then there's other companies where I sell after a few weeks. I just go, no, this is turned. It's not moving in the direction I think. And I have sold a few positions in the past week where that's exactly happened. I've only held those positions for a couple of weeks, and I've sold because I had a look at the chart again. And I went, a classic example of this is Seek. This was a mistake for me, taking a trade position in Seek. I thought, oh, the chart looks pretty good. The company did release something positive on the 19th of November. Share price went up on that day, and I thought, oh, the share price is breaking out. It didn't break out. It did not break out, and that was my mistake, thinking the share price was breaking out. And then share price has pulled back. So this was a negative chart, a negative enough chart for me to sell at a loss. It wasn't a big loss, but it was a loss nonetheless. And I want to keep to my processes and the chart itself. I had a look at the chart before I sold. I went, yeah, would I have bought again into this? No, and the answer is no. Anyway, so thank you for that. So it's not really a time period per se, and it's just individual circumstances for each particular chart. And the other thing about Ansell, so this share price of Seek did drop a fair bit, but when you look at Ansell, the volatility was quite narrow. The share price wasn't going, like the range for that 4-month period when I held and didn't really do anything. The range was fairly narrow, and I'm okay holding shares when the range is fairly narrow. But if you just pair that to Seek, you can see the moving average is still going up. But when you have a look at Seek, there was also a moving average crossover. So definitely the chart for Ansell was a hold at the very worst. And Seek is, in fact, it's a sell right now in my books. Unless you think the company has really good forward prospects, and maybe it's a buy if you think it's undervalued. Anyway, thank you for that, Jan. More stock picks. Lots and lots of someone's picking US long-term bonds and believing they will finally see a market crash. There you go. And Rick Fenellian says, will be fun to see. Thank you. Rick Fenellian also mentions CATS, wherever that was, Katana Capital. Buybacks may reduce shares, but capital raising or performance bonus shares increases shares. Notice today only one seller at 1.25. Yeah, I'm not going to discuss Catalan or Katana Capital anymore, but you have been doing share buyback, but share price of that company hasn't really done anything over the past 20 years. Ben Hutchison, thanks, Kneppy legend. You're welcome. Oh, no. Me, looks like we've gone past the release of the video, the stock picking video. Me, 45678V loves my work. Thank you. And in fact, they've got a nice little me. Looks like Dub which is Dubber, has bounced nicely with a bit of volume for the last 1.5 cent couple of raise. Hopefully it become cash flow positive this year. Let's have a look at Dubber. This was a bit of market darling 2021, 2021. Dubber, really good growth in revenue, but their growth in costs were actually increasing at a greater rate than revenue, which is not a good sign. And I can see what me is saying here. The chart actually does look interesting. But let's have a look at the weekly chart. You see the share price went up to a massive high in 2021, went over $1.90 at the peak, and it's dropped from $1.90 all the way down to 3.68 cents. And that's the problem with these sort of companies that are burning through a lot of cash. If they don't have a business model where they are producing a profit, the share price can drop like this if these sort of companies become unfavorable. And that's why profitable companies, you'll see those hold up way better than these sort of companies, because what's the value of Dubber? It's really hard to assign a value of one of these sort of companies that is generating negative cash flow, is not profitable, because what's the value? What is the present value of all their future cash flows, which is a valuation of a company? It's almost impossible, because you're going to get a massive range. You get those who are positive about the future of the company having a much higher value, but then people like me will say, well, I have no idea, so I'm going to assign a bit of a margin of safety. So maybe the value of the company is $50 million, or maybe $20 million, or maybe $5 million. So that's the reason why these sort of companies, particularly when you have rising interest rates, they do take a hit, because if you think about how you calculate the present value of all future, cash flows, that present value takes a massive hit when interest rates start rising. Anyway, so Dubbo has been taking a hit. The next thing I'm going to do right now is I'm going to have a look at their most recent Appendix 4C. I have a feeling they're still burning through a lot of cash. Share price up 15% on a Friday, which is interesting. Looks like new director appointments. Maybe the market likes that as well. In fact, let's have a look at the second share price. Well, the share price was rallying. Share price has been rallying since the 23rd. Anyway, let's have a look at the most recent Appendix 4C. And this is going to be important because Dubbo will release their December quarter Appendix 4C within the next 4 weeks. So they have to release it by the end of January. And let's have a look. They released the most recent Appendix 4C on the 30th of October. How many days in October? 30. 31. I just had to think about it. Anyway, let's have a look. So cash receipts, 9.3 million. Cash receipts of this company has not been a problem. Even the growth in cash receipts has not been a problem. It's how much spending, how much cost they have. For instance, product manufacturing operating costs, 7.3 million. Staff costs, 7.7 million. So alone, product manufacturing staff costs are 15 million just in itself. And then that doesn't include other costs like administration, research and development. So the company was operating cash flow negative by $8 million in the last quarter. That's just one quarter. So for me, this is still a red flag. Still a red flag. How much cash do they have on hand? I went from $10 million to $2 million. So again, they probably would have done, the comment did mention a capital raising. Yep, 1.5 cent capital raising. So they did that capital raising a while ago, which they had to do. And the question now becomes, will they become cash flow positive? I think they're still a long way from doing that. Maybe in their commentary, they've talked about it. They've mentioned they want to become operating cash flow positive. Let's have a look. I'm doing this really quickly. Key messages. Continue progression towards achieving target of operating cash flow monthly run rate, break even in the final month of financial year 25. So I would say there's a chance that might be pushed back, maybe by a year. Operating cash flow monthly run rate. The other thing I want to just look at is, do they capitalize capital expenditure or not capital expenditure, research and development? You better see that just in the cash flow from investing activities. They don't. Okay, that's a good thing because they could be operating cash flow positive, but being free cash flow negative by a large amount because what they do with, they'll put it into the intellectual property part. So that's capitalized research and development. Anyway, the chart does look interesting. I'll give you that. The chart does look interesting. So this is, I would put this in one of my more favorable watch lists because the chart does look interesting. The volume has really increased since, I was assuming that was a capital raising somewhere back there, and the volume has increased since then. So there has been a bit of an increase in interest in Dubbo since November, late October, early November. But the chart does look good. Now, in saying that, the chart did look good back in February. Look at that nice run up in share price. Although I don't like how the share price just increased so violently. Sort of almost what it's doing now, but there is an increase in interest in Dubbo right now. Yes, critical metal shortages in Kazakhstan, Canadian company having issues, hence price rises. I'm assuming you're talking about uranium and that Canadian Kazakhstan company who has some government issues. And then we're getting to comments I've already replied to. This is the reason why I always reply to your comments when I've talked about it in the video, just so I know. What I actually usually do is I filter. So I should do that right now. I'll filter response status. I haven't responded. There you go. Oh, and we've got Just James. Just James saying you've just made it. Would you allocate a large amount, say 30% or more, into one high conviction or multi-bagger stock, higher risk, higher reward? I'll be honest with you, that's how you become rich. Or that's how you lose all your money. Or maybe not all your money. I'm the sort of person who would never have high conviction to do that. I always doubt any sort of investment I make. No matter if I'm confident it's going to be pretty good, I still lack the high conviction. So unless I am actively in control of the company itself. That's when I would have high conviction, not because I'm a really good operator or anything like that. It's just because I'm in control. And that's one of the reasons why I would never take a significant position in one company. There's just so many things that could go wrong that's out of my control. And that's just me. It's one of the reasons why I would never go on a cruise, because I'm not in control of what I'm doing. You might say, what? You're in control? No, I have no control where the boat goes. I want to be in control where the boat goes. It's why I'll never go on any of those tour groups. Not in control. It's why when I go overseas, I rent my own car. I have complete control where I'm going. I just need that. I've been a part of these not large tour groups, but after I went to, I was a camp counselor in America for a while, and then we bought a couple of cars. There was like 6 or 8 of us bought a couple of cars, and then we just traveled through United States and Canada, and I hated it because I had no control. It was a group, we decided what to do, and I hated that. Anyway, so that's just me. And I think it's very important to understand thyself. I'm not going to try to change. That's who I am. And I would never get such high conviction that I'll take a 30% position. In fact, when I have a 10% position in one company, I do become a little bit wary. I go, I should take profits. But that also means I won't become filthy rich in the one position like Twiggy Forrest. He had all his money in Fortescue. I'm not even sure he was running that company. I have no idea his background, but he had all his money in this one company. And of course, we know what happened. But you'll also miss a lot of examples. And sometimes when I see the share price of a company drop 80% or 90%, I go to Hot Copper, I look at the forum of that company, and you will notice a lot of times people responding, well, I've lost all my money. I had all my money in this one company, I've lost it all. And that happens all too often. And then they'll go, well, investing in the stock market's a fool's game because you're going to lose all your money. I had one person tell me this at work. Oh, we'll never invest in the stock market because I had a friend who lost all the money in it. And I was just thinking, didn't even reply. I was just thinking they'll probably put it into a story stock, and that story stock went bust and they lost all the money. Hence, people think, it's a very risky, it's gambling. In fact, that's what he said to me. It's gambling putting your money in the stock market. It's not if you know what you're doing. Okay, so let's go all the way back down. Let's go all the way back down to where I was. Why is that? Oh, I was going to go back up to the top. Okay, here we go. This was 2 days ago from Bill I4F. Thank God for the update, Kneppy. Okay, this was my status of all my trading positions. You're welcome. Would love to hear your opinion on FANG. Diamondback Energy. Chart looks good if it can hold above support at 161 from the recent correction. Can you possibly provide an FA rundown, and what are you looking for when looking at these companies for growth? For some reason, I thought FANG was just the what is it? I'm pretty sure there's an ETF. Yeah, I don't know. FANG. What's FANG stocks again? There's a FANG stock thingy. FANG stocks. Yeah, FANG stocks refers to the stocks of 4 popular American technology companies: Facebook, Amazon, Netflix, and Google. Okay, yeah. So that was, for instance, that's what I thought you were talking about. I thought there was an ETF on the ASX that had was called FANG as well. Anyway, but just looking at this, when I did Google FANG, Diamondback Energy markup is $50 billion, P ratio 9.8 according to this. So Google, whatever this is. I know nothing about Diamondback, nothing at all. Now, I don't even know what they do. So the first thing I would do is I would go Diamondback, just have a look at the company itself. Diamondback Energy, Diamondback Snake. No, that's not what I want. Diamondback Energy. Am I doing this right? I'd go to a Texas-based independent oil and natural gas company. First thing I would say is I would never buy oil gas companies for the long term. And the main reason behind that is they're mining companies. They're mining a resource that can be who knows what's going to happen to the price of oil in the future? We just don't know. It could go up, could go down. If Trump gets his way, there's going to be an oversupply of oil, in my opinion, over the next few years. He wants to drill for oil everywhere, and that could lead to an oversupply. And if there's an oversupply of oil, the price of oil will go down. So we just don't know the supply and demand of oil over the long term. And I would always say that oil companies, just like any other mining companies, are not high-quality companies. By nature, they cannot be high-quality companies by my definition of a high-quality company. The other thing I would be not nervous, but when I do have a look at oil charts, I just don't see any, although the price of oil has gone a little bit of a run recently. So I had a look at oil the other day and I was thinking, oh, this is starting to look a little bit interesting, but that's just based off the chart. But if you have a look at the weekly chart for oil, there's just no trend. So but there's been no trend. In fact, oil hasn't risen all that much over the last 20 years. Yeah, in fact, the first time it went above $70, and it's at $74 now, the first time it went above $70 was in 2006. So it's almost 20 years ago. So since then, the price of oil has just been going sideways. Now, that doesn't mean it won't go up from now, but it's just been going sideways. And I think one of the reasons behind this is an increase in supply of oil on the market through fracking, that sort of thing. Now, I lived in Oklahoma between 2001 and 2005. There was very little fracking, if any at all, back then in that part of the world. And then they really increased the fracking. And the amount of earthquakes in Oklahoma has just gone from nothing to a massive amount of earthquakes. Increased earthquakes. In fact, if you just Google it, increased earthquakes. Sorry about this tangent. Oklahoma fracking. I'm not saying fracking's bad or good or anything like that. I just want to see when that increased. Thousands of earthquakes have occurred in Oklahoma surrounding areas in southern Kansas and North Texas since 2009. Yeah, so by that point, I had already left. And I'm pretty sure it's because of fracking. I could be wrong, but I think it is. And I'm pretty sure fracking, getting a lot of oil out of the ground through that process, has increased the supply of oil. I could be completely wrong, but I think it has. So just based off that, I would never think about this company as a long-term hold, but that's just me. So when you say an FA rundown, that's the first thing I think about. But I'll just have a quick look at FinChat, FANG. Interesting ticker code, by the way. Now, this is looking at the past. So what I'm doing is, this is what I do for all companies. I just have a quick look at their past financials. But yes, you can see the revenue of this company has increased significantly over the last 10 years. But we'll continue because I don't know their projects. I don't know if they've got any more projects coming up into production. So I just don't know. And particularly with mining companies, you just don't know unless you know that company and all their projects pretty well. So it's really hard for me to give a FA analysis on FANG or Diamondback Energy because of that. I just don't know what they have. The first thing I'd do is probably go to their website. If you don't know anything about this company, have a look. They should have projects like company. So it looks like they do mention where their projects are, which is in Texas. They're near the Guadalupe Mountains, which is a mountain I want to climb, the highest mountain in Texas. That's sort of on the border of New Mexico and Texas. But I would wish they have some sort of where we operate. And I'd love to see their projects. They're in the Permian Basin. Anyway, that's all I mention when it comes to the FA fundamentals of this company, because I think you have to delve really deeply into this sort of company to understand it. Not saying that this sort of company may not be a long-term hold for you, because we're all going to have different investing philosophies. That's very important. You should never borrow investing philosophies from anyone else. Well, completely borrow. You can borrow, I think, facets of investing philosophies from other people. And it's the reason why I actually do get upset when you do get experts saying the way I invest is the only way to invest. And for instance, what's his name, Phil Town, he actually said that. the way I invest is the only way you're going to make money. And I think that's ridiculous. I think there's so many ways, so many types of investing philosophies out there, and everyone should have their own unique investing philosophy. And my investing philosophy, this is not a long-term hold. Now, let's have a look at the chart. This could be just a trade for me if the chart looks good. I have a feeling it looks okay. In fact, you can see, overall, the chart has done pretty well since they listed back in 2012, except for the period between 2018 and 2021. Share price took a massive hit, went from 140 to 20. That's also a sign of a low-quality company over a 3-year period where the share price drops a lot. But since then, the share price has been on a massive tear, the weekly chart, but the share price has pulled back a little bit. And yeah, the share price has pulled back a little bit since the yearly high, which was back in June. A nice little V-shaped recovery after the share price dropped a lot. And I would say this little V-shaped recovery is because we have seen oil prices rise over the past week or so. Okay, that's what I'm going to talk about when it comes to that. Hold support at 161 from the recent correction. Okay, let's have a look at that. What I would say is, the other thing I would say, I want to draw a box. I forget where the boxes are. Where are the boxes? Can't believe I forget where the boxes are. It's because I don't draw many boxes, and of course I am under pressure here. Here we go, rectangle. Oh no, that's not what I want. Oh geez, I'm messing this up a lot. I'll just do lines. Well, how's that? It's pretty obvious the share price fell into a support zone. We can see the share price back in late 2023 going sideways, not doing much, and the share price actually did pull back to that zone. So if the share price fell below $152, that would be concerning because that's the previous low. The question I would have right now is share price might rally into this resistance zone right now, which is the area between the two moving averages. That is a resistance zone, and how it now moves after the next few days is going to be really important. Now, also the share price of this company would be in a way correlated to the oil price. So if the oil price has gone a really good tear, really good run, you'll see Diamondback Energy go on a really good run. But if oil prices start to fall again, I would not be surprised to see Diamondback Energy share price drop as well. But for me personally, this is more of a trade, and I wouldn't be trading FANG just yet, or Diamondback Energy. Oh, I get it. Diamondback is a snake, and snakes have fangs. Oh, there you go. But anyway, thank you, Bill. A company I've never heard of before. Second attempt, says Just James Dean. If the market drops 40%, go all in, including one kidney into gear. It's not a bad play, I would think, because that's not a bad play because it's geared. If you do see the market drop a lot, there's going to be value, and then you want to really gear that return. But what I would do instead of doing gear is I would use my margin calls, my margin loan. That's why I do have a margin loan with CommSec, is for those times. If I see the market drop 40%, I will use my margin loan to buy companies that I think are really undervalued and are high quality. So that's the road I would go down instead of, say, gear ETF. In that way, I am gearing. So I am gearing by using my margin loan because I'm buying way more of these valued companies. So that's why I actually have a margin loan right now that I'm not using. It's just sitting there, not using. I'm getting all these margin loan statements from CommSec that are sort of useless because I'm not using it. That's what I would do. But again, we're all different. Okay, thank you, Jay Lanks. I would really like to see your review of your top 20 you did this time last year. Oh, yes, I will do that. Yes, I will do that. And Big Boy Baby says he wants my reaction to my 2024 Kneppy predictions. I actually did fairly well. with the sporting predictions. I think I got 3 or 4 sporting predictions right, which is unusual. I can do that. I'm not sure I'm going to do a 2025 one. I think it's just pointless. And I have other things. I think one of the reasons I did this in previous years is because content this time of year or stuff happening on the stock market there's nothing much happening. And I thought this would be good for content, that sort of thing. But this year I'm doing these ASX Daily Rundown videos, so I have content every single day almost. And I'm also doing these videos as well, which I didn't used to do. But I'll see, I can do that sort of how I did. It won't take long, I suppose. Yep, I'm doing that, big boy baby. Oh, Sumami Mood, holding it to 2025. Bought it at $1.40. This is OFX Group. So this broke out on financial year 22 results. Share price at 7-year high. I'm pretty sure I traded OFX Group at that point. But again, this was just a trade. I've traded OFX Group twice now in the past 3 years. So let's have a look at the chart for OFX Group. In my opinion, again, this is a lower quality company that is just a trading stock. Okay, so broke out in 2022. Oh, there's me buying. Oh no, that was 2021. I like this. I like where I like how I put where I bought. And this was a breakout. Yeah, back in 2021 at $1.32. And the share price went on a beautiful run after that. And then I sold at some point. And then I bought back in just after the 23rd of May, 2023. Share price went up 20% on that day. So it must have been good results, a good announcement. Share price went on a good run, but I remember thinking and selling when the share price pulled back. I can't remember what happened. Can't remember what price I paid, but I remember share price pulling back and the company releasing something, and I was like, I'm going to get out. And for some reason, I thought that was a mistake. Oh, that's me buying. No, I got the wrong period. I had the wrong time. No, May 2024 is when I bought, not 2023. I had the wrong year. I was going to say the chart looked weird. So I bought just after this positive announcement in May 2024. I can't remember what price. I think it was $2. And then the share price was in an uptrend. And then the share price pulled back. You can see this little pullback in August. And then I didn't like this pullback. I didn't like what was happening. And then I sold out at some point here. Share price then went on a nice little run. I was thinking, maybe I should buy back in. And then the company released something really negative on the 17th of October. Share price just dropped. You can see the share price going sideways. So that's actually a good sign. Share price going sideways after that big drop. So we haven't seen any enthusiastic selling. That's a good sign that maybe this is the low. We've already seen the low after this negative announcement. But at this point in time, share price going sideways, I have no interest, for me personally, in OFX Group. Great to see your thoughts and buys, Rick Thelian. Super accounts 2024 up 12% and 14% higher risk. Don't know ASX. Yeah, actually, there was one thing I discovered in my super. I can find how I performed over a certain period of time. So there is this one little thing I can do in my super that I can actually see that, which is really good, really good. So I think most people should have had a good year. I'm hoping most should have had a good year. It doesn't necessarily mean everyone had a good year, but most should have had a pretty good year. Oh, Greg Gamer, thanks for sharing. Have you had a look at Botanix Pharmaceuticals? Could start making some money soon. Yes, I definitely have Botanix on my watch lists. So that is true. They could be making a fair bit of money soon. One of the ways I could play this is just wait for the first glimpse of revenue, because I did that with Telix Pharmaceuticals. Well, not really. I didn't wait. I just saw how much revenue they're producing. And I went, whoa, holy dooly. And I bought just based off that. I just based off how much revenue or receipts they produced in one quarter. And I went, dang diddly dang, I'm going to buy some shares in that company. And I think the share price went up a fair bit. Telix, this was way back. In fact, I'm going to show you. No, I won't show you. So this is way back in 2022. So it must have been... did they release Appendix 4Cs? I can't remember. All I remember was being really impressed with Telix Pharmaceuticals. their 1 quarter growth in revenue or receipts. And I went, well, I've got to buy. And the share price has done really well since then. So that's one way to play Botanix, is just to wait for maybe some confirmation that, wow, look at the revenue and cash receipts they are producing. Or maybe now you think now's the time to buy. Because if they do produce a really good quarter report, after they do start receiving cash receipts, share price might be 20%, 30%, 50% higher from where it is right now. So you might miss a little bit of upside, but you do decrease your risk, because there is a chance, just a chance, their receipts, their their revenue might disappoint the market. There is that chance. Anyway, so I do definitely have Botanix on my watch list, and this was the announcement that really piqued my interest. First, soft prescriptions as commercialization ramps up. 17th of December, and the share price since then has gone from 38 cents up to 45. So chart probably looks pretty good right now for Botanix. Yeah, the chart looks pretty good. In fact, the chart has looked pretty good since 2023. Share price has gone from, when we had the first breakout, share price has gone from 6 cents to 45 cents. There's been periods where the share price has pulled back, and it seems like these pullbacks have been sort of buy the dip situation. So Botanix definitely on my watch list right now. Gazbo says that Gentrack is gearing up for a move higher. Let's have a look at Gentrack's chart. Do I agree or disagree? I think it'd be foolish to disagree with that, because we've had a history now, a 2-year history, where Gentrack just keeps on going higher. There's been periods of time here when I've been thinking, oh, I should sell. The most recent time was in October. I was thinking, oh, I think this might be starting to move into a downtrend. And I was just thankful that I was just patient enough just to wait, because then they released, I think it was their results, 26th of November, share price went up 28.1%. We have seen a bit of a pullback, and I reckon Gazmo might be right. We've had the pullback, and I think this is primed to go back to moving up. Yes, I sort of agree with Gazmo there. Although I'm biased, I am still a holder. In fact, I have a feeling this might be my largest holding now. Maybe, I don't know. Husrik, love the content like this where you talk about the reason for entry and exit. Learn a lot. So maybe I should do more of these sort of videos. Bullwinkle, Mesoblast also on Nasdaq, Meso, same chart, different price. How does this function? Pros and cons. Yeah, it's the same. They should be mirroring each other. So whenever a company is dual listed, they should be mirroring each other. There's no difference. If the price is different, it's just because the amount of shares is different on each. But they should be mirroring each other. Pros and cons, I would say it all depends on liquidity. There are some companies that are dual listed on New Zealand Stock Exchange and Australian, and they're highly liquid on the Australian Stock Exchange and probably more liquid on the New Zealand. So that could be one pro and con. So yeah, it's just dual listed. The share prices should mirror each other. If not, there would be arbitrage. Maybe not. And that's a reason why, it's a reason why if you have a look at what's a good chart, Rio Tinto, you'll notice the chart, you have all these jumps from the end of trading day to the start of trading day the next day. So the share price will open up or down significantly compared to the previous day. That's because of what happened on the international exchanges. So this is listed, I believe, on at least the New York Stock Exchange, and might be listed on other ones as well. And if the share price, say, rises in America by 2% overnight, more than likely share price of Rio Tinto Australia will rise. Maybe not 2%, but it will rise closely. That's why BHP is also, or their chart is also like that, because they're also listed on the New York Stock Exchange, and you'll see the share price can rally. Or actually, a really good one for this is Block. So what's Block again? It's in Australia, it's SQ2. This is probably a really good example of this phenomena. You notice SQ2, just look at the jumps in share price from one day to the next on open are extreme, and that's because it's listed. The main listing is on the New York Stock Exchange or the Nasdaq, and if the share price of Block there moves up 5%, you're going to see instantly the share price of Block in Australia move up 5%. That's why the chart looks like this. But if you have a look at the Block chart in America, it's a little bit different. Block, you notice it's more of a normal chart. Yeah, it's a normal chart. You don't see these massive differences, massive gaps, probably the way to say it. And that's because the main listing is on America, and that's what drives the share price higher or lower. It's America. Anyway, so that's the one thing you do have to pay attention to is what happens on the movement in the share price on the other exchange. I'm not sure what would move Mesoblast. I would assume it's the American or the Australian, or what's happening in Australia. Unlike Block, I think it would be America or Australia. And Meso, let's have a look at the chart for Mesoblast. So it's not like, it's a little bit different than the Rio Tinto BHP Block. I expected maybe a little bit more a chart like that, but it's not like Mesoblast here, which is more clean. Or maybe not. It's similar, but they should mirror each other, to be honest with you. Oh, by the way, Mesoblast went down yesterday by, was it 5%? Did Mesoblast in Nasdaq go down 5%? It went down 2.4%. Yeah. And I think the main reason behind that is Wall Street had a really good night. I think Nasdaq was up 1.4%. No, 1.7%. Dow Jones up 0.8%. Okay. So another really nice comment from Happy Now. I would say that Happy Now is a really happy person in real life, a really content person, a really nice person in real life. Fishball says, I would, but BHP when it's more closer to $32. Does that mean you'd buy BHP when it gets to $32? When would I buy BHP? I don't know. I actually haven't thought about this. I actually do think there is definitely an argument that BHP is probably one of the best mining companies in the world. If you have a look at the longer term chart, it has gone up over time. So there's definitely that argument. But again, I'm just concerned if we do see a really big weakness in iron ore, share price of BHP will drop a lot. And we saw that in 2016. That was a time to buy BHP. I really wish I would have bought BHP back then with my sort of investing philosophy right now, investing mindset. I would have thought, oh, there's great value in this company, and that's what I'd be looking for. I think the biggest fear back then would have been, how far can it drop? How far can it drop? But it dropped as low as $13. Oh, no, $12.50. Imagine buying BHP right now for $12.50. Okay, so Bill, I4F, before you make a video with your top quality stocks that you hold and looking at, can you give a basic rundown through of the quality US companies you hold for the long term? And if you had to start over again in January, which of them would you be happy to invest in? Well, that's a really interesting question. That seems like a standalone video. Which of them would you be happy to invest? I don't mind that sort of philosophy. Have a look at your holdings and think, would I be holding this right now? And if you say no to one particular holding, why are you holding that? Are you just holding it because you've just told it? So it's a very good question. Would I hold those companies? And I would say right now, majority, I would say yes. If not all, I would say yes. There is one I'm thinking, oh, maybe I should sell. Anyway, so many of the top companies overvalued due to having a great 2024 slow growth and less volatility would be ideal for majority of my portfolio. So that is an interesting question. And I have thought, maybe not the American companies, but there are Australian high quality companies I know. I've been thinking, I do believe it's overvalued and maybe I should take profits. I did that with JB Hi-Fi and the share price has just kept on going up. So that does sound like a standalone video, I think. CMNHL1329 expecting Mesoblast to re-rate to $7, which was its all-time high 14 years ago, with dilution accounted for. Yeah, you have to take into account dilution. The way to I'm trying to think. Market. I'm trying to think if I'm pretty sure TradingView has a market cap. If you have a look at the monthly, no, that's the wrong company. I have to look at Mesoblast. What am I doing? So this is Mesoblast. So even though it doesn't have the market cap going all the way back to 2013. So even though the share price went up to almost $10, there's been a lot of dilution. So the market cap right now, I think I've done this, might be just the same or very similar than it was in 2009 when the share price was at its height, because this company has been doing capital raising after capital raising after capital raising because they're not profitable. They're burning through cash. And I think this could be a beautiful looking chart, by the way. This could be the start of something really special for Mesoblast. Could be. Not saying it will be. Could be. There's a big difference if everything goes right. Reptilian says, I think just James Dean was referring to you saying, if Wesfarmers was $40, I would buy you. Yes, context here. I'm forgetting what was said and said, but yeah, if Wesfarmers fell to $40, I would think about buying. And then he said he would sell his kidneys if it got to $40. I think that's overdoing it a little bit, but MAP 040 or 0V0, Mesoblast up 900% this year. I think it's now up 1,000%, I believe. Am I right in saying that? Mesoblast up 974% in the last year. 975% if you round up. 975%. And it still could go up higher. Nine Slide Glide has something very nice to say. Thanks for all your videos, insightful analysis. It's truly remarkable the amount of time and effort you put in to share your ideas and observations. You're also very generous in answering various questions from your viewers. It's much appreciated. No doubt it will always onwards and upwards for your channel in 2025. On another note, I truly hope you're on board Universal Stores. Another record close today and up 100% this year. I'm hoping 2025 will prove beyond doubt that they are the highest quality retailer on the ASX. Listed retailer on the ASX. Let's have a look at Universal Brands. This is definitely one that has popped up on my radar numerous times over the past year. The first time was back in, December 2023. That was the time to get interested. It's funny because I actually did notice this sort of breakout here. The shift in, it wasn't really a breakout. It was a shift in trend back in December. And that was the time to get interested. A nice little pullback in July. And I was just waiting to see if the share price could move above this purple box. It did. And they also released pretty good results in August. That was a time to buy as well. And I've missed all three times. A really good time, nice time, nice time. Even then, when they did release their results, share price popped up 11% on the day. Share price went sideways for the next month. And the share price has gone higher since then. I'll be honest with you, there are a lot of opportunities on the stock market. Would I say Universal Stores is the highest quality company, retailer company? I could probably list 5 that could give Universal Stores a run for the money. Okay, someone else wants to do a video on Botanix Pharmaceuticals, I could do that. And my last question today, this is from Rick Thelian 6 days ago, or maybe I could do, to clarify my comment question, it would be nice to see all extra shares, capital raising, including options, charts, and financial data. The day after the election, Elon Musk's bank account increased more than he donated. Why we hire islanders to pick fruit in the top end and make backpackers having to work in rural farms as part of visa? You know what? I've been a fruit picker in the past. When I was at university, me and my cousin, and this was in January, went to Griffith, New South Wales, to pick fruit. We picked oranges, which there's not a lot of money in oranges, or orange picking, by the way. Most of the fruit pickers we did sort of meet were international, and there was this one vegetable that was really lucrative for fruit and vegetable picking. I forget what it was. I do remember it was in the ground, and it was sort of a hush-hush. if you got a job picking this particular vegetable, you kept quiet about it because there was a lot of money in it. Not much money in orange picking. We had a great time, but it was only for experience, not experience. It was only for, well, I suppose, experience and memories, that sort of thing. And this is true around the world. Those who tend to pick fruit and vegetables are not the locals. You have to get people from elsewhere, backpackers, Pacific Islanders. In America, it's people from elsewhere in Europe. That's why when they went through Brexit, a lot of farmers went, yes, we support Brexit. But then they realized, who's going to pick the fruit and vegetables? And they had to import people, I believe, to pick that. In America, it's the same. Who picks the fruit and veggies? It's not the Americans who do it, the locals. No way, it's below their status. So you get a lot of Mexicans, a lot of Guatemalans, Hondurans coming up, picking that, and a lot of them are illegal. And there was one guy who said, I think I might have mentioned this, if all these illegal immigrants get deported, there's going to be no one picking the fruit, and the food in the supermarkets will dry up really quickly. Anyway, so I don't think it's going to happen because it would cause significant disruption in the United States if Trump follows through with his threat to deport all the illegal immigrants. It won't happen because the economy over there needs to function, needs illegal immigrants to actually function. It's interesting. The day after election, Elon Musk's bank account increased more than he donated. I still think because he can't be president. He was born in South Africa. A president of the United States has to have been born in the country, which is really weird. I actually lived in the United States for 8 years. I could have stayed and lived there, but I could never be president. Both my sisters, who were born in the United States, could become president, even though they barely lived in that country. My second sister has never lived, apart from her first year when she was born, has never lived in America. My other sister has. She could become president. It's just an insane rule. I could continue. Big Boy Baby says, actually no, Rick Thellion. Ooh, okay. So Rick Thellion, wow, on TED Week, Oracle, Nasdaq, a sad face. What happened with Oracle? I can't remember. The charts, oh, I do have a position in this, by the way. The chart still looks okay. Share price has dropped a little bit the last few weeks, but it could be in a support zone right now. So I'm not willing to sell my Oracle position just yet. It's more of a trading position with Oracle. SLX, which is Silex Systems, a good buy after opening $6.17 after dropping to $5.68 before rising again. Let's have a look at Silex Systems, I believe. Oh, yeah. Again, I think the share price of this company is going to be correlated to the price of uranium. I think it would be. I could get rid of market cap. I was going to overlay uranium price, but I can't be bothered. Acusensus, on you spoke about previously. Nice day, 12.5% up. We have mobile phone seatbelts in New South Wales. I think Queensland, they have those as well. I think all states have those as well. Now, I'm just going to have a quick look at Acusensus chart. I am interested in this one for a trade. And the share price is doing what I'd like to see. A really good day on the 11th of December, up 13%. You can see a little bit of selling the next day, and the share price really hasn't been sold off. So definitely one in my watch list right now is Acusensus. Thank you for reminding me, Rick Thellion. And the last one for today, I'm starting to go through these older comments right now, is Big Boy Baby. I took profits in Developed Global the day before the announcement. Unfortunate timing, but profit is Robert. I think we've all done that before. Timed it a little bit off, but that's okay. It's going to happen, but the thing is, you don't dwell on it. I am thinking of taking profits with my Developed Global. My position is up 37, not quite 20%. Wait there. Yeah, not quite 20%. And, we do have a moving average crossover. It's really interesting because we don't see any trend just yet, I do like the future of this company. I think there is a chance that there is a bit of undervaluation when it comes to developed global. But I want to see a bit of an uptrend developing, and I'd like to see a breakout above $2.70. Still a little bit of way to go there, but I bought this because I thought below $2 this was a nice little trade, short-term trade, because of support level at $1.90. Anyway, that's all I have for this particular answer and comment video. If you have any questions, any thoughts, leave those in the comment section of this video or any other video, and I'll be sure to answer or reply to your comments. Anyway, that's it for this video. Don't forget, I am not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day.